Zusammen. Jetzt ist es nicht aufgekommen. Okey-doke. Let's see. So we go directly into the presentation and hope that everybody can see. Let's take away the video panel. Okay. Can you guys see the presentation?
Yeah, we can. Looks
Cool.
great.
Okay. My name is Peach. I'm one of the co-founders and the CEO of Axelra. I'm together here today with Lucas.
Hi, everyone.
And Stephan, and we are in our series Tech Venture Building Like a Pro. It's the second of the third trilogy where we focus on product and especially how you can create a validation of your product in 50 days or launch an MVP generating or then an MVP that generates revenue in 100 days, and especially the topic pivoting becomes a focus in this seminar. We're gonna start directly with an introduction in tech venture building and its 4 stages. That's a little bit the model approach we developed over the last 5 years now. And then we deep dive into what you need to focus specifically on the product along those 4 stages. I will introduce them at the first part. And then efficient strategies for rapid product validation and MVP launch. It's also done by Lucas. And then I will give a little bit an overview about what's pivoting and what's the theory, what's the tips, what should you prevent, and what kind of pivots do exist. And then I'm very happy to hand over to Stephan Meyer, which we had the pleasure to work for a decent amount of time through all of the different aspects together. He's a really cool dude and very knowledgeable, and my absolutely favorite lawyer in the world. He's actually not 100% fit. But he made it here, so he's joining then. He already joined, but he will give the presentation there. And then we have 50 minutes interactive Q&A with all of us. And if you have questions already before, as Emma already mentioned, just raise them in the chat and we can start, or just interrupt me while speaking. Okay, so let's start. Axelra in a nutshell, quickly about our overview. So we are a tech venture builder, so that means we are co-creating and shipping revenue-generating MVPs after 100 days. We made that 100 days because we believe that speed is super essential at the beginning. Funding is limited, and a little bit to talk about that. It's so the process of tech venture building at early stage for corporate and startup with skin in the game is what we actually do. We made that in the last 5 years around 38 times, co-created 20 ventures. Some of them already have really nice valuations and progress, but it always takes a lot of time and it's a numbers game. And our approach we have unites the 3 dimensions: product management and growth, and everything together is what we understand as tech venture building. Tech venture or the venture builder is something very popular in the last couple of years. I would say in the last 2 decades, whereof the most, let's say, increase of numbers of company builders you would see in the last, let's say, 10 years or 5 years. In terms of the naming terms, so venture builder is actually the same like company builder or the same like a startup studio. It's a very similar term. Some might see that a little bit different depending on if they do it for corporates or if they do it for startups, if they do a lot of startups, if they accelerate or incubate, but basically it's the same. You also see a list here from a provider that give an indication on where they do sit. So there are many. Europe is one of the hubs, an interesting one, and as well, of course, in America, and the rest parts of the world, especially in Asia or Africa or Australia, it's not that common yet, but they are rising quickly. And why would you do something like that? You would join or collaborate with a venture builder because they do have better economics and a better chance of success through of various reasons. And to put that in number, the IRR, so the return on investments, are typically higher statistically. The ratio investment and earnings, so the multiple you can get for the valuations is higher, and as well the time to go to markets or to go from 0 to Series A is higher due to the reusability and things that you do. You can imagine, so if you do something like 30, 40 times, you become quicker and more experienced in that. So it's pretty simple. There was a Financial Times rating 2 or 3 weeks ago. It was published from Financial Times. So we were very happy that we were identified as #1 startup hub in Switzerland and Austria, and number 32 in Europe. And now the advertisement block is over. So I will just continue and dive into the stages of tech venture building. So normally, if you do start with a venture, many of you might be familiar with it. So you're super excited at the beginning with a lot of enthusiasm, and then the really hard reality is gonna hit you until you're gonna find the product market fit. And it's actually a really tough process that you need to go through if you start a venture or a startup that should become profitable. Whenever you don't
Excuse me, very sorry to interrupt, but we have your face in front of the slide, so we can't see the whole slide. Is there a way, because I also see you in the top right corner of my screen, so is there a way we can, I don't know if I'm the only one having this issue, but I have your face
you should not
on the
see
slide.
My face is super boring. Let's wait. I will just reshare again. Let's do it that way, and I hope this is working better.
Is it better?
Yes, that's perfect. Thanks a lot.
Sorry about that.
Cool. Thanks. We have active participants. I love that. That's cool. Nice. Okay, doc. So as you can see here, so it's tough to go through that valley of death at the beginning before we go there. And actually, many startups are being incorporated every year. So in number 2023, the number of incorporated startups in Switzerland was 51,637, and it was also a lot of capital deployed into that. But if you take a look also on how much money got invested, that number changed dramatically this year, especially in Q4 2023. So we get at one of the first times since 2014 a really big impact on how much got invested, because this number decreased, especially in Zurich, by 59%. So it's hard for the ventures now to find new capital, and VC, the venture capitalists, are looking more for traction and scaling cases and probably less for startups that do have funding as a business model, which is also on one hand side a healthy development because they really are looking for traction, but it makes the life harder for entrepreneurs to find or ensure enough funding and liquidity on their process. And if we take also a look a little bit on how large is the success rate, it's a common number that's available. It's about 80 to 90% of the startup fails, 10% in the first year and around 70% to the second and the fifth year. And the reason for that is mostly they do not address real market needs, have a wrong timing, which is still a really difficult thing to hit. And then team things, right? It's team disharmony amongst the investors and the team and incorrect team. But interestingly, idea, business, and funding are less known for reasons why they do not succeed. And especially this no market needs is very much correlated to the product, which we're going to talk today, as they try to build something where it's not really a need or a fast fix, and we'll deep dive to that. And when we build such ventures, we do have identified some steps we wanna show you, and those are basically 4 fits, 4 stages, and 3 areas, and then I will hand over to Lucas to show you. So the first essential step that you should really take a lot of time, and I cannot stress that out too much, is spending time to find the problem, not a solution, a problem that's worth solving for a target group, also not for everybody. And that's a really tough thing. We have a small market here in Switzerland. We don't have so many addressable problems worth solving, but identifying a real problem that's worth solving is a really important first step. Most of the startup already come to us and ask us. We have around 7 to 8 requests a day, and they come with a solution, but they spend more time with the solution and not with the problem. They do not understand the dimensions of the problem. Second step, after you clarified the customer need and found out, okay, that's the desirability, it's in the product or solution design, the feasibility. So what you do, you address the problem solution fit, and you get a validation from customers that your solution solved their problem at least partially. And first of all, if you have a really good problem, second step is to find a solution that kind of mitigate it. And it's important that you get the validation from the customer that this is really what they wanted, and they're also willing to pay for it before you start actually building it. So the third part would be product solution market fit. So whenever you start to build an MVP and sell the solution to the market as a product or services, you add, beside the desirability and feasibility, the viability. So die Überlebensfähigkeit in German. So you can build something that's desirable, that's feasible, and you can also kind of start to earn the first revenues on that. You also need to think about pricing, they need to pay for it. And only then you do start about scaling. So the scaling consideration starts to kick in at the step 4, where you have the business model fit, where you scale the business model profitability and pay attention to quality, but you're not going to solve the scalability topic in step 2. That's just not the focus there. And it's important that you follow exact these steps. Of course, it's allowed to think and talk about scalability already in part 2 or part 3, but it should not be more than 5%-ish. Okay. Second, we started to understand this pivotal steps leading to the end game of you build something, it's going to be sustainable, and we made steps into that. So the first step we had is exactly to that fit. So ideation, validation, launch, and scale. And after that should happen the point where you start to enter profitability. So that means you start to earn more than you spend. That's a really tough thing. Only a few of the startups will make it until that point, and they do not invest or burn money, so they really start earning positive cash flow. That doesn't mean that the business case is already positive, but the cash flow they have, the MRRs, the monthly recurring revenues, is higher than, for example, the monthly costs, right? And what we also made, we made different criteria where we could identify and also understood, okay, look, from who you're going to get the money in order to build that. Because what we found out is the typical amount needed in order to build a tech venture in Switzerland with IP, developers, stuff like that. So not a retail business and you do drop shipping, but really you have 5, 6, 7 guys working at your company, you create an IP and you find investors. Until you come to the point of profitability, it's around 3/4 to 5 million of investment. And in most of the cases, the entrepreneur and the founder team with all employees and also with family, friends, and fools will not have the sufficient amount of money to do that. So they will go to an external investor. And what we try to do is finding out who is going to invest in you and what you need to demonstrate in case of traction and results and revenues and customer base based on if you're a B2C or B2B business. So those are these 4 stages. And the last one is those 3 areas. So in our approach, we unify a lot of different methods, but in a pragmatic way. On one hand side, you have the product delivery, so designing products and service offerings for whatever IT services, platform, decentralized app, mobile apps, whatever it is. And then you have the management capability, how you build a company. So it's actually everything related to funding, the trust services, accounting, also fiduciary services, the business model, the phantom share option plan, the recruiting, the pricing, and then at least, but not the last, growth. So at the beginning, understanding how you can get traction, how you can close customers, how you can perform the customer acquisition, how you can build such an ecosystem. Everything united then is the execution. So now we have the basics. So you understand a little bit what Tech Venture Builder is doing, the areas, the stages. And what we do now, we come now on the focus of your product along the stages. And I'm very happy to hand over to my friend Lucas.
Thank you, Peach. Okay. So as Peach said before, we can summarize this Tech Venture Builder journey within 4 phases. The first one is called the ideation phase. And I mean, it sounds simple, but really start with the problem, as Peach said before. It doesn't help if you come up with the best solution ever if you haven't found a real problem. So it's important within this phase also to talk to real customer, understand their pain points, and try to translate these pain points into a suitable solution and not the way around, right? So after that, it's also within this phase very important, you should avoid the temptation to be perfect. Because at the end of the day, you want maybe create a clickable prototype. That's completely fine, and you should do this, but you shouldn't create like 100 slides. You shouldn't create 100 workflows or complex swim lanes. It's enough to, you know, brainstorm how to design 5, 6, even 7 different screens showcasing the main use case. So just to bring you a concrete example, within this phase, you don't need to design a login page. I mean, everyone is aware that if you have a digital product, somewhere you will have a login page, right? So focus on maybe what are your USPs and how these USPs then eventually will solve your problem. Because then you will eventually reach the validation stage, also called the problem solution fit phase, where all the assumptions that you made previously can be validated within this phase. And here is important also to start thinking of, okay, if in the previous phase we had a bunch of different screens, here it's okay to have a clickable prototype, well designed, to have more workflows, to understand what are, you know, the fundamentals of your digital product. And it's also important to keep in mind what's the MVP scope. So focus on the features you eventually that are generating revenue in the next phase, and build a beautiful product to validate these features, right? And also make sure to include pricing, because pricing is something that at the end of the day, it's a crucial point for the customer, right? It's your product worth enough to pay $10 per month, or 20, or 30, or $5. After this, you can then prepare for the launch phase. And just to quote Y Combinator, the MVP, it's not a product, but it's a process. So no matter how good you are in designing a digital product or conceptually design your business idea, you will make some assumptions. And no matter how good you are, some of these assumptions might be wrong. So the MVP, it's really explorative in the sense of you should be able to validate even your riskiest assumptions, to validate them, gather feedback from your customers. Eventually, pivoting is also part of this process, and then improve, iterate, and improve. And also focus on revenue generating features. So I always bring this as an example because I also have a tech background. When you're developing like a mobile app in the sense of a digital product, as a developer point of view, like building a profile, it's something good because you have a lot of animations going on. You can crop your profile picture. You have a lot of gestures. So it's really challenging on a tech perspective. On a business perspective, though, I mean, you have Instagram, you have TikTok, where you can personalize thousands of things. So this feature will not add any value to your product and will not generate any revenue with it. So it's important to focus on the core, on the fundamentals, and iterate quickly. Eventually, you will reach the last stage, which is also called business model fit. I mean, if you reach this scale, it's around 10%, right? It's fair to assume that 10% of our startups reach the scale phase. Within this phase, you need to slow down a little bit, decrease the product. You need to also question or brainstorm about the main USPs. Eventually, in the first 3 phases, you also took some shortcuts in terms of, you know, to have a good timing. So it's also important to understand here what kind of integrations we want to keep, reevaluate your scope, and also look at eventually new integrations that you can build on in-house. And these are the 4 phases.
Absolutely. And one of the important things is also you see the revenue, profit and valuation line. We put them just above the boxes. So even in the validation stage, we try to bring our pre-MVPs, interactive prototypes to the case that they can start to get as little as, let's say, $9.90 a month subscription money or so sign-up fees or something, just to prove with money that there is something worth, right? Because if you ask some guys, yeah, do you like it? Yeah, they like it. Do you find this is a good idea? Yeah, it's a good idea. You will always hear that stuff, but with paying money, it starts to hurt.
Yeah.
It starts to hurt a little bit, and you can prove that you solve the pain. And as Lucas said, if you do not talk about pricing and you shift that decision about if it's gonna cost 5 million a month or $5 a month, you're not able to really validate, because there is always a price involved. And especially in the launch phase, we try to already generate, let's say, 100 kilo plus revenue in the launch phase, because this also gives you a much better situation towards potential investors. They do see some traction, and for them is as well the investment de-risk if they can say, okay, look, this is now 100K already performing revenue. It's not pre-revenue. So they do it. I can help them with my contacts, and my money so becomes a strategic investment to scale. And then the revenue is just, it's a scaling competence, but also the people and the team you would need to perform step ideation, validation, and launch might be a smaller and different team compared to the later stage when it's about scaling a new market and scaling an organization and having 10, 20 people, compared to just build something, ship it, test it, and iterate it, right? And you're going to change that idea of what you do constantly. We're going to talk about that later on in the pivoting case, but only 1% of the startups keep their initial idea of the product while they're building the product.
Yeah.
So pivoting is the new standard. Everybody is changing, evolving, refining, becoming better. Okay, doke. Then let's jump into the efficient strategies for rapid product validation and MVP launch, because you can do that either in a very, let's say, slow way, or you can use an efficient strategies. And as you all know, money is very not sufficiently available. So we should find a good way how we deploy that efficiently.
Yes. So there is actually no secret sauce how to build a very beautiful digital product, but there is an approach that we always take, and I think this it's something that we usually use with our own ventures. So the first thing is about the idea itself. We try to avoid, or at least to challenge, so-called torpid ideas. A torpid idea, also to quote again Y Combinator, is a consumer idea, actually, usually in the B2C sector, that people tend to develop. And it's something that also previous founders in the past tried and failed. But everyone has this feeling about this torpid, that he is the solo founder in the world to have found this idea. And usually the pitch is, it's something like this. It's an app, or it's a website, or it's a digital product that help people discover new things, like discover new concerts, new videos, new content about something.
Travel.
And And the pitch is always like that. So like discovery is broken. You can't use Google anymore. You can't use Yahoo anymore. Or nowadays, ChatGPT. You need to use my app to discover new things. So this type of ideas, it's something that we usually would like to challenge. The second approach is about, you should ask yourself if you are testing some features or if you want to emotionally bind people to your product, because it's something essentially different if you want to validate your product in the validation phase, or you want to people being emotionally attached to it, right? And this is something really important to understand, and also to ask yourself in the first stage, maybe it doesn't need to be like that, but in the MVP launch or at later stage, you want maybe people to fall in love with your product, right?
And that's also a very important topic you need to discuss with your investor if they already appear on the screen at that moment. So you all probably heard the terminus technicus proof of concept, right? POC. So if you do a POC, people always talk about, yeah, you need to prove that the concept is working. So really feature driven. But if you want to find out if people would really download your app because they love the whole experience, you need to test it differently. And that influences the approach on what you're going to roll out and define in the product validation.
Yes.
Because then some parts of the, let's say, customer onboarding still do belong to it. You don't need to build it, but you can show it screen by screen that they do understand how it works. You don't need to build it actually, but you need to show it. And if you would go just for a dashboard functionality and data visualization, it's a completely different
then
thing.
it's different,
right?
yeah. Also yes. And also something that Peach mentioned before, I think it's really important, because maybe a friend of mine is watching this, because no matter how good or bad your idea is, your friends will always tell you, oh my God, you have discovered something that no one thought about it. And I think it's could be, on the one hand, stimulating, motivating, because it motivates you to go forward. On the other hand, they are biased per definition. So try to validate your ideas, or better said, try to validate the solution to your problem with real customers and not only with your friends. And again, I can stress this enough out. It's important to verify your assumptions. So you will make some assumption about the pricing, about the design, about even some strategic choices. It's important to have a framework that will allow you to eventually verify your assumptions quickly. Iterate. Don't stick to your ideas. There is also some ego component here. I mean, if you come up with a feature that you love, it's your baby in a way. So it's tough to say, no, this feature doesn't make any sense. It's something that at Axelra we have experienced, but it's also important to admit at some point, maybe it makes sense to pivot because of that assumption. It doesn't make sense because of this and that, right? Throw away no low code, in the sense of eventually in the first and the second phase, you will build a low code solution or even a clickable prototype. So don't be afraid to throw it away. At the end of the day, you wanna build an MVP. It's an iterative process. So it's okay to throw away stuff, and you shouldn't be ashamed of. Let's put it that way. And it's important also to understand that the product itself, it's the best marketing you can have. At the end of the day, you can have thousands of marketing strategies, but if your product is desirable, if your product is something that people will fall in love with, that would also help you reduce your customer acquisition costs, will also help you have another presence online. And you know, at the end of the day, I always take the ChatGPT example. Or you also take also the Tesla example. They don't spend millions on marketing, and everyone is loving and using the product. I mean, it's a bit unfair maybe to compare with ChatGPT, but it's something that they did really well.
And it's a good question. If you ask, would you recommend it? Ask also why they would recommend it or recommend it not. It's the highest, let's say, highest proof you can get if somebody expose himself and recommend it to somebody else.
And it's also nice to see how people pitch your product for you, because you can learn a lot from it, right? So in terms of execution, use best practices. Don't reinvent the wheel. To give you a concrete example, If you're building, for instance, a mobile app, you will design eventually a login screen, sign in, sign up. And nowadays, it's a standard to have a sign in with social media. You should not be the one to just allow people to sign in with email and password because people are used to it, right? So you should really follow best practices and standards. Content is also user experience. So when you design a product, it's always good to design it visually, but also in terms of content, how you communicate towards your customers, how you position yourself, what are your main USPs. With pitch, we always say that the hardest thing to design are the intro screens in a digital product, because you need to explain your product within 3 sentences, within 3 pages.
And at the very early beginning.
At the very early beginning.
Second step is creating a website landing page with the main benefits why you should do it. But it's a really good exercise to create it.
Yes. Spend time with real customers. Even if you're just a tech founder and you love to build software, it's important to understand that you're building software for someone else and not for yourself. So try to spend time with real customer, talk to them, ask them what they think or what features they want to have on your roadmap. In the mobile space, Apple is not always your friend in that sense. When you submit a new app to the App Store, there is a very strict process. They will take a look at your app, and eventually they can slow you down in the sense of that they reject your app. So be aware that there are other alternatives to test your app. For instance, you can use TestFlight, which is the testing app that allow you to reach out to more customers without the need to go fully compliant with Apple. User experience, it's also a differentiation. So keep in mind, do not over-engineer stuff, but also keep in mind details matter. Try to focus on micro interactions as well, and to have this uniqueness and sexiness that people love. Because again, you're building something for someone else and not just for yourself. And yes, as Peach said before, the best proof you can have is where people are committed or are willing to pay at least, even, could be even $3 per month, $10 per month. But this is the best proof you can have that your business case is good and that you eventually can have traction in the future.
Thank you. Then, having said this, we will just do a small block about pivoting, what it is, how it works, and then hand over to Stephan. Okay, let's start. So first of all, it's pretty easy to tell everybody how smart you are before you haven't done any work. That's something that many people they want to overthink and plan everything. That doesn't work. You just need to get started. And most of the startup founders, they have insane plans. They compare themselves as well with, yeah, but also Google did it and stuff like that. I love that quote from Netflix. I mean, Netflix was not built in one day. They started with DVDs and stuff like that, but it's a progress, and you also should allow yourself and your team to do the progress and find the niche and focus where you want to innovate and ship ideas and pivot around that. But it's at the beginning not that important that you exactly already know where it is, but important is to get started, because in the process, in this magic moment of starting something new, you will discover in the context of that situation what's around you and learn a lot. And pivoting, changing that is not an admission of failure. More, it's a strategic decision to align the startup more closely with the market opportunity. So you get started, cool, and then you see in the context when you're there, oh, you need to adapt. It's actually a process of evolving. It's not a process of failure, right? Mm-hmm. And it's basically a strategic shift of a startup direction. They can focus on new market, product, business model. They can be proactive and reactive. So you could say, okay, we need, or just we see there an opportunity. But if you want to successfully pivot, you need to do a lot of preparation works, and it always helps if you decide the pivot very on a conscious level and say yes or no, and then you need to have a plan that you can execute, measure, and improve. So it's not just something you do in a week. So it has involved many other things, and there are 3 different let's say areas where 10 different types of pivot could happen. So there is the product pivot, business model pivot, and target market pivot. That can also be combined, of course, but the zoom in pivot actually shifts the focus from a feature of the product. The zoom out pivot is the expansion, product feature service. The platform pivot is changing from an app to platform, vice versa. And then technology is really changing the underlying technology. It's a hard one because sometimes, or most of the times, you don't see directly associated customer benefits short term on that, but it's always related on the product. In terms of the business model, you can change this business architecture, so from high margin to low margin, stuff like that. So this price elasticity move, it's a value capture pivot where you alternate the revenue or monetization strategy. That's often correlated to additional funding. So you need to have probably more liquidity, or you're going to optimize it because you want to change it. Then it's the engine of growth pivot, that you adjust the approach to scale the business, and the channel pivot, where you change the distribution or sales channel of the product. Sometimes it's an involvement, so you can just add some new channels, but changing it really, imagine Tesla would say, now we cooperate together with Audi to sell our cars also in the Audi stuff. It's completely different. But they changed, for example, and said, okay, we just do it online, and then we have our own garages. And that really means that you change that fundamentally. And in the end, it's the target market pivot, where you say, okay, you change the customer segment, or that you say, okay, look, we just figured out there is a new customer need. And those are actually the 10 ones that we know also from theory, and that we always try to find out and cluster it in a way when we start. And the question now is, okay, if you now are going to change the strategy, you're not going to change the vision. Actually, the vision is not that easy going to change. It's kind of your DNA, but how you approach the path of moving your venture along the vision, that's the strategy that changes. And it's super vital that you at the beginning have a clear understanding why you want to pivot. Not just doing that on purpose and a little bit, because the impacts can be very massive. So it's important that you do understand also together with the board and your co-founders the why, and you take a conscious decision around that. You say, okay, look, we want to do that. We also going to plan it, and that you are conscious of if it's going to be a minor adjustment, and by when it will be completed, what resources, what communication need to be involved in that, and that you prepare it. So you should get feedback, you should conduct market research, you should also kind of prototype the pivot, right? And say, look, we want to change it. How would you feel about that? Also ask investors about that, also ask users about that, and also prepare the communication towards all the stakeholders before you do the change. And then actually execution, measure, and improving the change, of course. But a pivot is this massive change, and that needs some elaboration before we execute it. And the risk of not preparing and not conscious decide whether you want to execute such a pivot on it can be really massive, can be killing a startup. And therefore, it's super important that you manage that together. And now some advices before we hand over to the example from the evolution from FX to Obligate is, so it really does help get the right mindset for that. So you need to really commit yourself to the pivot, that you say, okay, now we're going to execute it, and we also think about all the changes. You should not stop that pivot in the middle of the execution. That's really hard. And it's important that you remember yourself what's the goal. So you need to have a clear decision point why you're going to do that, because you're not going to do it just because you think it's important or it can be blah, blah, blah. So you really have a clear goal that you say, okay, this is vital for the business. And those are the KPIs, why we do it. This is how we measure it, that everybody is really committed to that. And also, it's good to have short-term challenges and also changes, but the long-term idea of that pivot should be always clear. Second one, strategy and plan. You need to have this alignment. You should be careful about what the market is actually doing. So if they're not also changing at the same time, that's hard information to gather, but look there for signals. And you should not pivot away from your core competencies if not really needed. So if you have found your focus, you should really, and also your USPs, really think about if you want to change that. If you don't have already identified it, it's okay to pivot, but be very careful with kind of making a big difference or a distance to your core competencies. And you should also not pivot too frequently. So it just consumes a lot of energy and resources. Probably your budget will be used in double the speed. So it's money intense. And it's important also to listen to the customers and market data already at the beginning. So see, it's like A/B testing, right? You want to go there, you have clear gates and milestones. This is how we're going to test it. Is it okay? Okay, we start. Okay, feedback is okay. So really have this kind of commando execution board. And then execution, it's important to have your board on that, but also have your employees on that, that they also understand fully the plan. It's like normal change management, but it often gets changed sometimes only from the product division, which is wrong, because you also need to integrate marketing and sales and customer here, and also getting the data on as okay, how do we measure that? So have that prepared really carefully. Okay, so that's the basic for pivoting. So now I'm very happy to hand over to Stephan. I will just exit the presentation so Stephan can share the journey from FQX to Obligate. Stephan.
Thank you, Peach. I share my screen now.
Yes.
Peach, if you can let me know whether you can see my slides.
We can see.
Excellent. Great. It's my great pleasure to be here. I'm Stephan Meyer. I'm co-founder of Obligate. Obligate is a Swiss-based, we call ourselves Fin legal tech company with around 16 employees. And we founded Obligate, previously called FKX 2019-2020. And then we had the pleasure to, together with Axelra, create our first MVP version, which was then an excellent basis for further scaling. And therefore, as you can imagine, we also did all the wise things Peach and Lucas have presented before. I have now two goals in the remaining around 10 to 15 minutes. First of all, I want to briefly present you what Obligate is doing. But then also secondly, I want to shed some light on our evolution from FQX to Obligate. We can later on discuss whether we label it more an evolution or a pivot, and how to also distinguish those two factors. But as said, regarding Obligate first, what Obligate is providing is an end-to-end on-chain digital securities platform and infrastructure. Now you see a lot of buzzwords on this slide, but what you can see in the core is it's both a platform and an infrastructure, and it has something to do with blockchain and digital securities. And what has been driving us from the beginning, so referring to the vision you mentioned, Peach, was that debt capital markets lack accessibility. And I took here the example of a traditional bond issuance. So if either a large company or also an SME wants to issue a bond, this takes up to 6 weeks on average, and that's already quite a short period. 2,000 manual tasks are involved in this process, and up to 13 different intermediaries are required and have to be paid. So from various different banks to issuing agent to paying agent, financial markets or infrastructure. And the result of this is it is costly, lengthy, and only viable for large issuances. So today, issuing a bond below, let's say, 50 million is just not worth. And now, what we have created and what our product is a combination on the top of a financing platform. And this financing platform has both issuers, so companies which want to raise debt, and qualified investors. And this financing platform, so first of all, it has nothing directly to do with blockchain, but it's a fintech solution, including everything parties need to initiate, structure, and negotiate the issuance of bonds. So from credit assessment to legal documentation to a marketplace. And then below this platform, run on public blockchains, we have our decentralized lifecycle and settlement system, consisting of various smart contracts. And they then do everything from issuing the legally valid electronic securities, settling those, doing so-called corporate actions until then the repayment at maturity. And the result of this is that we can make issuances of bonds much cheaper and faster. And here you also have a slide showing the value creation. And as you can see, we start already from arranging a transaction, so up to then structuring it, up to the legal part, and then also cover the full settlement element of this. I don't want to go into too much detail here. I also posted here just a few screenshots to make it a bit more concrete how it looks like. So you see here a visualization of the marketplace. You have then panels coordinating, monitoring your debt instruments. You can transfer those, you can sign. So everything required in here. And the platform is live and running. We have various different issuers actively using it, various investors, also more and more channel partners. But we also started quite a while ago, as said, 2019 and 2020, under the brand of FQX. And the focus we had at the beginning was on the one side similar, but also quite different. So our aim at the beginning was to digitize the most paper-based financing instrument in the world, called the promissory note. And so the promissory note, it looks a little bit like a check. So very simple instrument, unconditional promise to pay. And the law required until recently that those instruments must be issued in a paper-based form. And therefore we said, so why not creating those instruments in a digital form? I also here posted some old visualizations. I see Peach also, I don't know whether you have printed it out. Yeah, very nice. So here you see an example of this super generic simple instrument, but it's a bilateral promise to pay. So one single instrument, and we try to position this instrument in particularly supply chain finance constellations, where you have a buyer and supplier, but also for general corporate finance constellations. And we also, from a tech perspective, try to build it as a SaaS product with a certain execution platform, but as a SaaS model. And the idea was that this so-called e-note engine can be sold to other fintech companies, particularly financing platforms. And those financing platforms can then, instead of just doing loans, they can integrate our e-note engine and then execute transactions in form of those electronic promissory notes, therefore enabling transferable instruments. And we also did some very nice transactions, some nice POCs from Credit Suisse using it, Signum, we had publicly listed companies. So we saw a lot of interest and demand in direct peer-to-peer blockchain-based debt instruments. But on the other side, it did also not scale that quickly as we wanted to have it scaling. So therefore we assessed, and we had 4 major key findings. So finding 1 was that our idea of doing this in a SaaS model, selling it to other fintech loan platforms was tricky because, first of all, those platforms already have a legal and contractual structure to do transactions, and loans and securities, transferable securities, are quite different. So requiring different flows, requiring different UI. So therefore, the threshold to integrate our engine was quite high. So this was finding one. Then finding two, we historically used a very closed, private, Swisscom-based blockchain. And the result was that we just had no efficiency increases at all. Because if you run your own blockchain system without any other parties on the same infrastructure, efficiency increases are very limited. Point three, in bilateral loan constellation, using a transferable instrument is not really required. So if Peach wants to borrow money from myself and I lend Peach, but only in the purpose that I wait until repayment, then we don't need this path of creating a transferable instrument. Then we can just provide a contractual loan. And then finding four we had was that the longer the financing duration, the more you have to anticipate certain frictions, the more covenants you need, the more representations, and therefore also the higher the need for a certain modularity in regard to the instrument itself. And therefore, based on this led to an adapted product, or the evolution from FQX to Obligate. So instead of providing just a SaaS engine which can be integrated, we created our fully fledged securities platform based on public blockchains and also leveraging stable coins. But that's why I call it as an evolution. We built on the same core. We had the same know-how, so this combination of finance, tech, and legal and regulatory elements, but we implemented and executed it differently. And I also here briefly visualized how we did it. So previous focus, SaaS model, then we switched to an execution platform, including also a front end. Instead of just doing bilateral transactions, we now purely focus on multilateral financing. Makes quite a lot of sense. The more investors you have, the higher the added value of using transferable standardized instruments. And then instead of settling previously just via fiat outside of our system, we switch to crypto and stablecoin financing, because then we can leverage the automation of smart contract programs, and we try to build it in an as open, as interoperable manner as possible. And here, Peach, I also just copied your 10 types of pivots and try to shed some light on what we experienced and what we, so as you see, we did quite a few things in your list, so from zoom out and sideways. So we focused on where we have the highest value creation. We switched from a SaaS model to a marketplace, nonetheless leveraging distribution partners. On the tech part, we pivoted from a completely closed private ecosystem to a public environment, to public blockchains. And also we had changes in the channel and in the end user segment, where we really try to focus on the early adopters for doing this type of digital funding. I think the conclusion of this is that by using under the same vision you have, as Peach explained before, with the same core know-how, with the same product, but doing certain adaptations in how you do it, how you create the product, how you enter the market, you can first of all find the product market fit, and secondly also scale significantly faster. And in our example, this led to us meanwhile raising a bit more than $10 million US from various venture capital funds, from tech VCs to a bit more traditional, such as Six fintech ventures, up to Circle as the globally leading provider of stablecoins. We have now various issuances live on the platform. For example, 2 weeks ago, we had a publicly listed tech company from France issuing a bond. Last week, we had a reputable Swiss factoring company from the transport industry issuing. Today, we have a Luxembourg-based fund doing microfinancing, also issuing a bond. So they all use the same financing platform and infrastructure to issue their instruments. And now, as a last slide, but Peach already provided you with a lot of valuable insights and suggestions. My personal top 3 suggestions in case of changing the focus. You can then label it as either evolution or pivot. VCs usually like evolution more than pivot. So therefore, we changed the title in our case to evolution. But point 1 is get as much data as possible as decision basis. So do what Peach said, try to get a quantitative, qualitative data, try to do interviews with customers, but be also aware that you will never reach the status of full wisdom, full clarity. So you can just go closer and closer. Suggestion 2 is focus on your team and product's core strengths and combine those with customer value. So focus also on solving genuine problems, referring to point 1 above. So as a result of your decision basis above, then validate and decide. And decide shouldn't be underestimated, needs some courage from time to time. But it's extremely important to really consciously decide. Only then you will get the focus. And as a last point, communicate transparently, engage your team and stakeholders. We did a full rebranding. We did a new launch event. And this allowed us to also create a lot of enthusiasm. So we a lot of excitement around the product. Therefore, it's also a great opportunity to do such a change or certain change of strategic focus. And now we're just in time, but I hand over to you, Peach and Emma, whether we still have a few minutes for Q&A.
All good. Thank you very much. Thank you very much. We spent a little bit more time, but it was brilliant. Thank you very much. I just have, before I open the Q&A, one information to spread. The next Venture Building Like a Pro will be focused on management and growth. It's going to take place on the 15th of May. You can sign up via the existing channels. And now let's jump into Q&A session. What kind of questions can we answer for you guys?
Let's see, we have some in the chat already.
Mm-hmm.
We had one regarding once you've built your MVP in 100 days, what are your tips for marketing and growing your user base to get to the 100K revenue?
It really depends on the case. B2B completely is different than B2C. Having already during the MVP phase an explorative set of using different strategies, how you growth hacking things that can work is good. We have a list, we have a training regarding to that. So what kind of works? Normally, many different things do work, but you need to find it out specifically for your target group. To get started with some really easy stuff on social that doesn't cost you too much is really good. And also have analog things like events, Stephan just mentioned it, to try out, but also have physical real contact and showing that you're a real startup helps a lot at the beginning.
Cool, thank you. And then we also have a question here. So in your experience, is scaling different when it comes from market to market or country by country, or is it more or less the same? And what are the areas to pay specific attention to? And Igor is asking on the behalf of a B2B SaaS product. Yeah,
it's very, very different. We have cases like an app in crypto where we launch in 130 markets at the same time with one click, because you have different costs and also the product is easier. If you launch B2B SaaS, it's a completely different story. It's always about relationship building, crafting those relationships, ask for referrals, starting with POCs. It's a really slow process, but also once established, really, really strong. So you don't, as hard you get those connections, you probably also can keep them. But it's really important to go with referrals and partners and established partners, building an ecosystem. And I guess the building ecosystem approach via referrals is more important in B2B compared to B2C, where you just can launch and see what happens.
Thank you.
Andre
sorry.
had the question. He's raising the hand. I just see.
Perfect. There we go.
Yeah, one second, please. I will share my. Hello, my name is Andrei Tachin, and together with Anna Maria, my partner, we are working on startup. We are at this point in like pre-seed stage, and what we know is that what we are founding is that usually incubators and accelerators, they require some kind of like some kind of maturity to be a part of the program. So how is that in your case? What is your requirement to be a part of your program?
We are not a program. We are not a program, not at all. So that's a completely different thing. A program is taking you a lot of time, spend around 3 to 4 months with some coaches and work on a specific defined amount of workshop, mostly related to things like growth and pitch decks and stuff like that. We don't do that kind of stuff. We're not a program. We compiled an overview on the link I just posted. It's axelra.com/funding map. And on that funding map, you will see, I'm just sharing the screen here, you will see a list of all available programs in Switzerland, incubator accelerator programs, with all the deals on it. So if it's how much equity they take, what's the requirement, what kind of industry they go, and then later stage also what kind of grants do exist, what syndicates, what VC are kind of investing in your thing. But we are not a program. That's a different thing. We are a venture builder, and we are really executing. We do not consult and advise. We deliver, execute. That's a completely different thing. But you also need to pay for.
Okay. So one question I also have is how long it usually takes before like the ideation to launch stage in average from your experience?
We always try to do from there is absolutely nothing to it's a revenue generating MVP. The company is incorporated. We have people onboarded. The company is kind of starting to be in the market 100 days. It's a theoretical thing we learned, but we also proved it now. The average time we have is around 93, 94-ish days, but it really depends on the use case. And we also only do it for digital products and services. We cannot build whatever bottle in 100 days. It's always related to digital stuff. Yeah.
But obviously, from my experience, usually it takes approximately 100 days only to bring the first version of your MVP, or like, let's say, the pivot, right? And usually it takes a little bit more than that.
It depends. So history proves different numbers. So the first version of the pre-MVP build, we tried to deliver in 50 days.
It's also on the scope, though. I mean,
yeah.
You need to keep in mind the scope should be also doable within 100 days.
Right.
Of
but
course,
you can also write us, and then we can also get some other questions, and we can sit together.
Beautiful.
And
yeah. Thank you.
Other question?
We see in the chat that there is a interest in Axelra and what you guys do, and I would say my recommendation is to connect with Peach and Lucas, and on LinkedIn write them an email. They're very nice guys that I think would like to sit down with
Likewise.
you. Yeah, thank you. I think so. If you have like very specific questions with Axelra and how they can help you on your journey, or how if you can get any advice, or if this is something for you, then I would connect with them and sit down together. Right? You agree, Lucas and Peach?
Sure. Yeah. Any more questions to pivoting, maybe, and also the case from Stephan with Obligate? I mean, they really did it, and it's an interesting one to understand, because the change that Stephan showed is pretty complicated. It was not easy.
See if we get something. Otherwise, I can see as well that people are starting to have their lunch break is done.
Yeah. What are your challenges when working with healthcare solutions? We don't do healthcare yet. We had a strong focus on financial services and retail. healthcare, that's something related to, it needs more time for development. So our 100 days will probably not work with all the regulations attached to that. So we are not in the healthcare business yet.
Perfect. All right.
Okay.
Yeah, it looks like people are starting to get back to work from the lunch break.
Sure.
Like I mentioned, connect with the guys and chat more. And I also see here, can we have access to the video? Indeed, it will be in the thank you email that we send out to all the participants after this webinar. So check it out there as well.
Cool.
All right. Then I say thank
And,
you
Thank
to
you, Joanny.
everyone.
Danke vielmals. Einen schönen Mittag. Schön, habt ihr den mit uns verbracht. Ist cool. Ich hoffe, es war spannend.
Danke
Cool.
euch.